Hello, everyone. This is Will, aka Dr. Financial Literacy. So we are moving ahead and chunking along and looking at velocity banking, accelerated banking, and reducing credit card debt. Today is part three. Yesterday, what I did was place my check onto the credit card and got a new balance. So I just wanted to talk about that today. Okay, so let's go ahead and get started. Trying to adjust the light. Okay, so every 2 weeks, as I stated before, my paycheck is $1,694.93 in California. So with the credit card that I'm looking at, Navy Federal, yesterday or previously, about 2 days ago, the balance on the credit card was $5,212.49. And this is the card that I'm using, the Navy Federal Cash Rewards card. So I have a balance of about 5,212 on that. I have a due date to pay this credit card, $141, excuse me, and 85 cents. Of that 141.85, 89.95 is of interest on the credit card, and 51.90 would go toward the principal of the credit card. That 51.90 that they tell me is 1% of the balance. So 51.90 is 1% of $5,212.49. So if I just make the payment, the regular payment before June the 1st of 141.85, $89.95 will go toward the interest, and $51.90 will go toward the principal or the balance, which would bring down my balance to $5,160.55 if I just make that 141.85. And typically I would have paid maybe $200, so add it up a little bit more to bring down the principal. Yesterday, when I made my entire paycheck of $1,694.93 onto the card, the balance came down to $3,517.33. Sorry that that's small, but yes, the balance came down to $3,500.17 and 33 cents. So let me make that a little bit bigger then. Sorry about that. 3517.33. 3517.33. 3517.33. So again, after I put my 2 weeks paycheck, the entire thing, I didn't hold anything back. It brought down the balance to $3,517.33. And in velocity banking, we're looking at the average daily balance on the debt itself. So since I went from 5,000 to 3,000, the average daily balance should now carry me for a couple of days, which should reduce the interest. So that's one of the principles of velocity banking, being able to reduce the average daily balance when you put a significant amount on that. Some people also call it chunking. All right, so now looking at theoretically for the entire month, I'm looking at putting my entire paycheck from 4 weeks of working onto the credit card. My expenses have averaged about 3,000 a month, going up sometimes to 3,200 according to what I had to pay. Like last month, had to pay insurance, in addition to a registration fee for California. So that was about $250. So it kind of goes, it fluctuates up and down, but I'm trying to stick with the average of $3,000 based on working velocity banking and my budget for the last 6 months. So it's important also to have a budget that you're looking at. The cash flow is $389.86 that I have extra, or what economists call discretionary income, for households to do the things that they want. So $389.88 is my cash flow or discretionary income to do some of the things I want. Some of the things is I kind of enjoy coffee, so I buy the coffee in a can. That's some of my additional discretionary income. So again, back to the minimum payment of $141.85. Because I put my first paycheck on there before the due date, that constituted a payment. So I can subtract the $141.85 that was inside of the expenses, and my expenses now represent $2,858.15. So again, my expenses have come down as a result of now I'm placing my entire, placing a check, my entire check onto the credit card. That constitutes a payment, so I can subtract it from the expenses, and now I'm at $28.58.15. So now when I go back up and starting velocity banking with the idea that my whole paycheck is going in for the month, so $5,212.45 is the credit card balance that I owe with Navy Federal. I'm gonna put my entire paycheck, $3,389.86 in. That will give me a balance of $1,822.59. Now I'm putting back the expenses minus that payment that I'm making as a result of chunking my paycheck into the debt. And this is the only credit card that I'm running everything through. So that brings it back up to $4,680.74. So I subtracted my income from the balance. Then I put back all the expenses minus the payment that is supposed to go into the card. And that gave me a new balance of $4,680.74. Now I'm gonna add back some interest, because they added interest in general previously from the previous balance of, I think, $6,000. So here the interest was $89.95. Here is $79.47. So it has come down some, as generally it will do when you make your regular payment. So ending this particular month, when I'm able to get both checks on and take all of my expenses out, leaving all my cash flow sitting in the card, leaving all my discretionary income in the card. Nothing is sitting in any other checking account. Everything is sitting here in a particular credit card. I don't have an emergency fund. I don't have a backup fund. If I need an emergency or something comes up, because this has cash advance, I can go in and just do a cash advance at the same price and the same rate of 18% as the credit card, and just pay it off again with my debt. I also have the convenience checks with it, which is kind of the things that they give you, and you can write off onto the check and get cash for yourself, pay insurance, pay car note. So if I need to pay someone by check, it's still coming out of this 5212.45 because I have available credit on it. So I'm fundamentally replacing my checking account with this debt, and this is what I've been doing with my other debt. When I decide to go after a credit card, I generally stop placing money in the checking account and then I replace it with one of these debts and see how it pays down. And it's kind of been working. So in summary, if I made my regular payment of $141.85 and almost $90 going toward interest and only 52 going toward the principal, then that generally would have had me down with a balance of $5,160.55 to go over to the next month unless I made charges. Now, because I'm using velocity banking, accelerated banking, and put that down, accelerated banking. In general, now what I should end up with is $4,760.21, which is a difference of about 400 between making the regular payment versus going the velocity banking route. Now this may be a result of, again, my cash flow is sitting on the account, just like if I had a bank account at Wells Fargo and a direct deposit was going from my employer to the checking account, this money, extra money, would have been just sitting in the checking account. Now I have it sitting on a credit card that I'm trying to pay off, and it helps with the average daily balance. All right. So that's just a recap of part 3. Again, took that entire paycheck from yesterday, close to 1,700. I immediately placed it on the debt, and that brought it down to 3,517. And now I'll start running my bills out of it as needed. So I'm looking at the bills. I'm gonna run my rent, which would be like $1,276, and I will use a convenience check. Go up to the rent office, management office, give them a check for $1,276. Well, $1,476, because then it includes utilities in general. My student loan, $374. Would just simply go to the website and run that through. The HELOC that I have, I expect that to be maybe 400 and something next month, because I only paid the interest. That was only 27 days on the HELOC. Now it's going to be about 30, 31. So I expect it to be $438, something like that. The electric bill, PG&E, here, I'm gonna run that through also. My telephone service, cellular service, also run that through the card, and all the utility bills. So groceries, gas, if I get something to eat out, shopping, if I do any shopping, and miscellaneous bills that are on a credit report, I'm also try to make sure I run it through here. So I will hopefully be able to show all the expenses that I have for this month that I run through the credit card, so that I'm keeping as much as I can of my income on the credit card to reduce the average daily balance. So one of the main changes is just no longer kind of relying on checking accounts, and keeping it here. Emergency fund, really don't have an emergency fund or backup. This credit card will be it. And it has increased because I've been able to pay off the credit cards in general. So the emergency fund is just not sitting somewhere in the bank and is being eaten away by inflation every day. So well, thank you very much. Again, this has been Will, aka Dr. Financial Literacy. I am a political economist, and I run experiments. I work with clients. I help with credit repair, credit update, do small personal loans, what I call GLOC, green lock, in general, to help others get to a better financial freedom. That's just one of the unique things that I do with velocity banking in general. So if you're interested in improving your credit, working with velocity banking, trying to build some assets, definitely I think using velocity banking, accelerated banking is a way to kind of go. So if you are interested, you have my contact number and my email. Give me a call or shoot me an email. All right, so just leave this board up for just a minute so that you can look at it. And until then, thank you very much. Have a great day.